Hey, you wonderful people out there. Chris here from the Business Report Show. Hope you're having a wonderful start to the investing week. Now, before I begin, make sure you hit that subscribe button. And if you do enjoy the video, make sure you hit that like. Every little bit helps. As a disclaimer, I am not a financial planner or advisor, and everything I say in this video is just my opinion and for education purposes only. Make sure to seek a professional before investing. Now, it looks like the last few days was much better trading sessions for the bull markets as most of the value and growth stocks were green. Very happy that I did some shopping over the last few days, especially picking up Tesla back at $600 as it's jumped over 20% in the last two trading sessions. I've continued some buys over the last couple trading sessions, and I just want to share some of those purchases I made before I chat about the two new stocks I've added to the Wealthsimple Small Cap Trade Challenge portfolio. So one of the stocks I've picked up was Virgin Galactic, ticker symbol SPCE. I was on and off this stock pre and post global pandemic. I did make a small return on it right before the tumble back in March of 2020, and I actually bought at the dip at around $14 at that time. I was impatient with the stock and I ended up selling at around $18, as at that time the global pandemic looked like it was going to be much worse than I thought it would be, and it would be decades before Virgin's commercial space vision was ever going to take hold again. So naturally, I've kept Virgin on my radar, and I found an opportunity to get in at around $29 the other day. So I picked up 20 shares, not a lot, as I still feel it's a very high risk stock. At the same time, if they can even get just one initial revenue generating flight completed sometime this year, I think this stock will rise on the positive sentiment. Last week, I picked up Ford Motor Company on the prospectus that its Mach E orders are actually quite positive and higher than expected. I think they're very well positioned to start gaining market share in the EV space. I'm not sure I'll be holding Ford for too long, however, but I'm definitely riding the EV wave that's starting amongst many traditional automakers. I also added Cineplex to my portfolio as well. Cineplex is the largest operator of movie theaters in Canada, and I've added this to my portfolio as part of the, call it, pandemic rebound companies that I think might have some good gains in the next few months as the economy reopens. I do see Cineplex as still a very high risk play, as their financials will continue to be negative over the coming quarters, and there may already be built-in expectation of reopening in the current share price. So I only picked up about 40 shares at $14.22, so it's a bit down since I purchased it. Alright, now for an update on our Wealthsimple Small Cap Stock Trade Challenge and the two stocks that I added over the last couple days. On Monday, I talked about keeping a couple oil stocks on our radar, NuVista and Baytex. I was expecting some pullback on those stocks due to some of the pullback in oil futures at the beginning of this week. But what was interesting is that both stocks did not pull back, indicating that investors may still see significant intrinsic value in the stocks even with oil pulling back from its highs. To be honest, I think these stocks are still very cheap even at these levels, and it is proven by the free cash flow that they were generating even before oil made its jump above $60. So I took the plunge and bought into NuVista today. Now the price does continue to make new yearly highs, so I expect some profit taking soon, and will likely pick up some more shares on the dips to dollar cost average down. As I mentioned in my previous video, the management for both NuVista and Baytex have made the right moves to weather the pandemic storm, and it appears that their balance sheets are going to look healthier in the short to midterms. NuVista's balance sheet does look a little bit better due to the lower debt levels, so I was willing to go in a little bit higher price for NuVista. Now the second stock I added to the mix is a Canadian IPO stock called Farmers Edge, ticker symbol FDGE. I've been following the agri-tech sector closely over the past 6 months, and there's a lot of growth happening in this sector as farmers and ranchers begin to realize the advantages of combining technology and the traditional ways of farming. I like Farmers Edge because they've actually been in business since 2005, and there are some financials to track their growth over the last few quarters. Now, those quarters have seen a growth in revenues. The only concern I have with the financials is that the cost of generating those revenues still outweighs actual revenues coming in. Now, that being said, cost of revenues does seem to stay consistent even with growing revenues, so as long as sales continue to climb, they should be able to begin generating positive net income on their balance sheet. Now for the company itself, in essence, their business is about developing farm solutions to sustainably guarantee productive farming at an affordable price. They combine on-farm hardware, easy-to-use software, digital agronomy, AI-driven analytics, providing everything growers need to get value from farm data, manage risks, and maximize returns. So as the world population continues to grow and humanity continues to figure out how to feed everybody on this planet, any technology or service that helps farmers bring more yield for the same amount of land for cheaper is a very valuable service. Imagine if through an app, a farmer is able to track the weather and have better weather models built to help him or her make key decisions when harvesting or planting crops. Or perhaps through a digital dashboard, the operator can look at the health of the equipment or the health of the soil that makes changes in order to increase the potential of that successful harvest. All this adds revenues to the grower's bottom line by giving them insights on their overall operations that were traditionally heavily reliant on human experience prior to development of apps and usage of AI. Farmers Edge had a successful IPO last week with their shares bumping up 25% to $20, but it has since pulled back and I was able to get about 5 shares for about $17. I may look to buy another 5 shares if there's further dip from that purchase price, but I do have a long-term view for that stock. Well, that's it, guys. Just a quick update on everything that's happened over the last couple of days. I do hope you're having fun with the Wealthsimple Small Cap Stock Portfolio Challenge. As mentioned when I started this, we are looking to build some good savings habits and looking to grow this portfolio as part of a greater diversification strategy. Don't forget to drop your comments below and let me know what stocks you're taking a look at and what stocks you've been adding to your portfolio. And remember, I'm not a financial planner or investment advisor, so make sure to consult a professional before investing. Don't forget to hit that subscribe button and the like button. Every little bit helps. Thank you for watching the Business Report Show. Remember to always be learning, always be investing. I'll catch you in the next video.